Crypto regulations in Asia. Welcome to the world of crypto regulations in Asia, where innovation and compliance meet head on. As cryptocurrencies continue to gain popularity around the globe, governments are grappling with how best to regulate this new frontier of finance. Hello viewers and welcome to our channel. Today in this video, we will explore the evolving regulatory environment for cryptocurrencies and blockchain technology in various Asian countries. So let's dive in, and don't forget to hit the like button and subscribe to the channel. Currently, crypto laws and regulations are inconsistent to say the least in Asian countries. The regulatory framework is fragmented and varied across the board. Some countries like China have banned cryptocurrency mining amid concerns over energy consumption. Along with Bangladesh, China has also issued strict bans on cryptocurrency trading and other crypto-related activities. North Korea has used cryptocurrencies to evade sanctions from the West and fund its nuclear missile program. However, the regulatory framework for retail and institutional investors is very unclear to the rest of the world. Bhutan has partnered with Ripple or XRP to develop the central bank digital currency or CBDC, while Myanmar's shadow government has recognized stablecoin Tether USDT as legal tender. Crypto regulations in Singapore and Thailand appear milder than in other countries. Still, the crackdown on the crypto economy is felt, particularly in matters pertaining to the anti-money laundering or AML, counter-financing terrorism CFT, and licensing, which have become more stringent in recent months. In the Philippines, cash remittances represent more than 9% of the total gross domestic product, and cryptocurrencies have become a cheap way to send money in and out of the country, especially for the unbanked population who need only an internet connection and a smartphone to execute transactions. In Indonesia, legally specified cryptocurrencies are recognized as trading commodities, not as a means of payment, and banks are forbidden to encourage the use of cryptocurrency as a form of payment. Cryptocurrencies have to comply with risk assessment, AML and CFT requirements. The country has recently experienced a rise of 280% in crypto investors from 1.5 million to 4.2 million, and a daily trading volume of roughly 117.4 million, and has issued a fatwa to its Muslim population against cryptocurrency use. Some well-established cryptocurrency businesses are based in Asia. Investment platform Crypto.com and stablecoin service provider Tether are settled in Hong Kong, while Singapore is experiencing an unprecedented upsurge of companies involved in crypto. The quick rise of cryptocurrencies has taken many countries by surprise. Some have only recently undertaken a regulatory approach towards cryptocurrencies, while others have not yet introduced clear legislation. Japan is one of the most crypto-friendly countries in Asia. Its government regulators recognize Bitcoin and other cryptocurrencies as a type of money and legal property. The industry is regulated by the Financial Services Agency or FSA, which manages transactions in the country's currency, the yen. The Japanese Payment Services Act provides a regulatory framework for payment services and regards crypto assets as payment methods. Like many other countries, Japan regulates cryptocurrency under AML and CFT measures. South Korea has traditionally been one of the most technologically advanced countries in manufacturing, electronics, as well as semiconductor. This has now extended to the locals' appetite for digital assets like Bitcoin, leading to the coinage of the term kimchi premium, where prices of Bitcoin are as much as 10 to 20% higher than other jurisdictions during Bitcoin's early life. Following the collapse of Terra Luna, South Korea's National Assembly has passed a cryptocurrency bill called the Digital Asset Basic Act, with the final phase pending the legislation and Judiciary Committee's decision before it becomes law. The cryptocurrency bill includes, amongst other things, the prohibition of commingling users' funds with the providers. Service providers also have to keep funds insured and maintain reserves in the event of hacks or system failure. The Financial Service Commission or FSC is the agency appointed to oversee the crypto industry. India. The government of India has considerably changed its standpoint on cryptocurrency regulation over the years. In 2016, the country imposed a complete ban on all crypto-related activities, from mining to buying, selling, and holding assets. More recently, it has considered regulating the industry in an upcoming cryptocurrency and regulation of Official Digital Currency Bill, which outlines a clear distinction between cryptocurrencies and the types of crypto-related activities allowed. In 2021, the government made a step towards regulating cryptocurrencies by proposing the Cryptocurrencies Bill. The law aims to establish a supportive framework for the development of the official digital currency that the Reserve Bank of India, or RBI, would issue. Interestingly, in its Union Budget 2022, the Finance Minister has unveiled the tax structure for cryptocurrencies with the imposition of 30% tax and 1% TDS on earnings from virtual digital assets. Generally speaking, the country's approach will be to protect both retail and institutional investors from fraudulent activities and speculative operations. Under specific guidelines, exchange platforms will be allowed to work as crypto providers for customer sales, purchase, and storage services. Singapore. Cryptocurrency trading and possession of digital assets are legal in Singapore. The country has long been one of the world's leading countries to encourage blockchain development and innovative application of cryptocurrencies in beneficial use cases. However, the Monetary Authority of Singapore, MAS, has recently cracked down on retail cryptocurrency advertisements for companies that offer crypto-related services to protect investors from risky allocation of their money and assets volatility. The measure includes outlawing crypto ATMs considered as advertisements to the public. The Payment Services Act of 2019 regulates 7 types of activities, including dealing with digital payment tokens, the likes of Bitcoin, Ethereum, and non-security tokens. DPT service providers are therefore required to apply for a license under the PS Act. How does Singapore regulate crypto? Strict AML and CFT regulations were handled by the MAS in January 2020 and further enhanced in 2021. They are outlined in the guidelines to Notice PSN 02 to stop the illegal transfer of crypto funds through Singapore, and it is applied to digital payment token service providers. In 2021, the scope was extended to the provision of custodial wallet services for DPTs. A consultation paper on the enhanced scope was recently released by the MAS on the 8th of May 2023 to seek public feedback to include intermediaries, brokering DPT services, and so on. Thailand. The rapid growth of cryptocurrency businesses and trading has signaled the need for Thai authorities to regulate the industry to mitigate financial risks for investors and companies, including assets volatility, cyber theft, personal data leakage, and money laundering. Regulators want to prevent businesses from enabling the use of crypto as a means of payment for goods and companies, as outlined by the Bank of Thailand, the Securities and Exchange Commission, and Ministry of Finance in a joint press release. They believe the widespread adoption of crypto assets could threaten the country's economic and financial stability. Thailand's Security and Exchange Commission also issued regulations for crypto custody providers to establish a digital wallet management system to ensure the safety of customers' assets, according to a press release on 17th of January 2023. This is on the back of a ban on crypto companies from offering staking and lending services in September 2022. Thailand's central bank announced it will trial a CBDC in 2022 to mitigate further the threat of crypto to the country's financial system. Malaysia. Cryptocurrency is legal and regulated in Malaysia by the Security Commission, or SC, under the Capital Markets and Services Order 2019. It is considered a security and is therefore subject to Malaysia's securities laws. Cryptocurrencies and tokens are not regarded as legal tender or payment instruments by the Bank Negara Malaysia, Malaysia's central bank. On October 28, 2020, the SC published new guidelines on digital assets for crypto providers who want to raise funds through token offerings, but also for entities that want to run an initial exchange offering IEO platform, and those who intend to provide storing and custody services of digital assets. All companies that want to raise funds with token offerings must use approved and regulated crypto assets exchanges that facilitate initial exchange offerings. Such exchanges are required to conduct due diligence on the issuer, who must be a Malaysian corporation with its primary business operations in Malaysia and comply with AML CFT laws. China. How is cryptocurrency regulated in China? The country applies the strictest regulation in terms of cryptocurrency. It's a blanket ban on all crypto-related activities, and all companies are banned from providing cryptocurrency services, from mining to trading and issuing cryptocurrency. Such activities are considered illegal financial activities by the People's Bank of China and government bodies. In September 2021, the country announced further strict measures to combat cryptocurrency adoption in China, including further scrutiny of companies supervising the regulations. China is not new to banning crypto-related activities. The first ban dates back to 2013 when the country banned banks from running crypto transactions. Why is Bitcoin illegal in China? China used to host over 50% of Bitcoin mining hashing power, and mining facilities represent good revenue for the local economies. The drastic ban on mining in June 2021, with the official reason to reduce carbon emissions, had dramatic effect on the mining industry. Hong Kong. The government of Hong Kong has pursued a relaxed attitude towards cryptocurrency for years because they are virtual commodities and not legal tender, money, or payment methods. As such, they do not fall under the Hong Kong Monetary Authority supervision. Is cryptocurrency, however, regulated in Hong Kong? Initially, the country will be looking at more stringent regulations that restrict retail crypto trading and investing, making licensing mandatory for crypto-related trading businesses and limiting the activity to only professional traders and investors. The Securities and Futures Commission (SFC) of Hong Kong has so far granted licenses to entities that offers crypto trading, provided they fall under the definition of security or futures contracts. In 2020 and again in 2021, Hong Kong's Financial Services and Treasury Bureau announced plans to introduce a new licensing regime that will require all crypto exchanges to be licensed by the SFC and in compliance with AML and CFT regulations. However, there have been great developments in the Hong Kong crypto scene. Starting June 1st, 2023, Hong Kong's SFC has begun accepting applications for crypto trading platform licenses. It has also agreed to let these platforms serve retail customers. This is a massive step given China's blanket ban previously. Vietnam. Vietnam is undergoing large-scale transition into digital and electronic payments, increasingly favoring cashless methods and encouraging apps, QR codes, and e-wallets. Within this framework, cryptocurrencies appear as an attractive payment method, especially considering that 1 million Vietnamese are reportedly using cryptocurrencies, and the figure is only expected to move up considerably within the next few years. With such an increase in popularity, there has been an inevitable rise in the number of criminal activities like hacks and cyber scams, hence the need to regulate the industry with more legal implications for those who operate within crypto-related businesses. How is cryptocurrency regulated in Vietnam? Generally speaking, Vietnam does not recognize Bitcoin and other similar cryptocurrencies as legal means of payment and actually wants to ban their use. The State Bank of Vietnam also banned cryptocurrency issuance and supply, and the lawbreakers face fines of up to $8,700 and imprisonment. Pakistan. According to the Federation of Pakistan Chambers of Commerce and Industry, President Nasir Hayat Magun, cryptocurrencies constitute investors' assets for as much as $20 billion, urging the country to provide a regulatory framework within the next few months. Like other countries, Pakistan has adopted different approaches to cryptocurrency over the years. A statement from the Central Bank of Pakistan in 2018 had demanded that the banks and payment providers refrain from engaging in any crypto-related activity. Is cryptocurrency regulated in Pakistan, and how? In November 2020, the Pakistan Securities and Exchange Commission published a document that contained guidance on the potential regulatory foundation outlined in collaboration with the Financial Action Task Force. The overall approach of Pakistan towards cryptocurrency and blockchain has since been open to the benefits of the technology and its innovative offering without the need for strict regulations. So this is our video today. I hope you all like it. Don't forget to hit the like button and subscribe to the channel and share it with your friends and family. We will be back soon with a new video. Until then, keep supporting and take care.